and I'm never going to bring it up again. See you in the playoffs. All right, everybody. Hope everybody's having a good day. Good morning, Lyndon. Good morning, Stewie, Eric in Northport, Longbox Larry, Ed Mines, Randy. Look, we only need one more thing, and this is gonna needle Don a little bit. You know what's gonna happen, Don? The playoffs in baseball are gonna start in 3.5 weeks, and it's gonna end up being the Brewers against the Cubs, and the Cubs are gonna sweep them, and the Cubs are going to the World Series. This is my year. I can feel it. I can feel it coming, everybody. We're going to get the Cubs in the World Series. We're going to get the Bills into the Super Bowl. Doesn't mean we're going to win. I'm just going to get my hopes up. And speaking of getting my hopes up, 6,500 on the futures. And everybody keeps acting like I'm insane, but they keep printing money. So be long. Be long right now. There are plenty of reasons to be very pessimistic about this market, but momentum remains strong. We're not just above the 20-day. We're above the 8. Short-term momentum remains very strong right now. I'm not saying that we're not going to completely blow up. We're going to talk about some risks soon. But if monetary policy and fiscal policy continue to support these markets, don't burn your money trying to run this thing into the ground yet. Do what I do. Follow these 3 momentum indicators. Look for the market to go sideways at some point. We'll explain why. Judd, good to see you. Go Cubs. Love that. Bill B, go Bills. Morale is high. Look, in my head, we're 16, 17-0, but it's one game at a time. Just like it's trading, one day at a time. That's why you got to be a member of our community. Take trading one day at a time. You join us each day because it's all about understanding that you are the liquidity that the market wants to take advantage of at 9:30 every day. So is this a safe day? Well, yes, we've already answered that, right? We're already above our key moving averages. We care about that. That's important. Secondly, is this a trap day? Not yet. We have CPI coming up. We have some key data coming up this week, but the market is pricing in. This is the thing that I want everybody to focus on. Okay? We're already pricing in a 25 basis point cut come a week and a half from now. It's this that is going to matter more. How high are the odds going to go on a 50 basis point cut? Now, I think there will be arguments for a 50 basis point cut. Will they do it? I don't think they will. But you're betting on, you're positioning for everyone else to start to get really optimistic about this. In the next week and a half, I think the odds are going to increase to 25%. And then heading into the meeting, they will recede. So the market gets bullish about the possibility of a 50 basis point cut. And then people realize, oh, wait, Jerome Powell runs the show. So resultantly, that will recede. That can impact the markets, especially heading into Third Friday, triple witching. I'm not allowed to say quad witching, apparently. The first thing I was told when I came here, don't say quad witching. Don gets mad. So I won't bring it up. What are our screens? We'll talk about that momentarily. People still filtering in. Erica Northport's here. Good to see you. Ed Mines, thank you for your 475 emails this weekend. I'm just kidding. You sent me a couple. Hopefully I answered everything. If I did not, remember support at TheoTrade.com. Put Garrett in the subject line. Always happy to answer your questions. Always happy to provide you with whatever I can to make your trading day better. All right, so heading into Monday, all right, we're 5. We're +5 right now heading into Monday with stocks on the S&P 500, more breakout stocks than breakdown stocks. Now, remember, the way that we measure this is pretty simple. I can do the math for you, or you can do it yourself. I bet you don't want to do it. So the number of stocks that are up 5% in the week, up on the month, and have a beta between 1 and 2. Why do we do this? Because we're utilizing the work of the great J.D. Henning over at Seeking Alpha, and one of the greatest minds when it comes to momentum trading and the understanding how a bell curve works. Okay, so you have a bell curve. You look at The stocks that are in pure breakout mode, and I just gave you a poor man's version of this. Every single sector has different coefficients, but what we're looking at right now, just simply keep it simple. Plus 5% on the week, up on the month, beta 1 to 2. Now go the other way. Down on the week 5%, down on the month, beta 1 to 2. Of all the stocks in the S&P 500, these stocks, we have, I think, 17 to 12 at this point. So that means we're positive. So we have to ask, where's the money coming out of? If we ever go negative, we look at what is called the FNGD, which is a leveraged inverse ETN, forgive me, that is built on total leverage of the FANG stocks. So here you are, 5.7. We are not above our 8-day. We are not above our 20-day. We are not above our 50-day. Momentum continues to remain strong. Now, people look at me and they say, yeah, that can't be right. Well, here's the thing. We had an excess liquidity event last February 21st, rallied higher, and the 26th rallied higher. Every major financial event that we have had happen in the last 5 years has occurred when we move above that 50-day moving average. So here is the Nikkei crash. Here is the short-term duration issue with the money market funds back in 2025. Here is Bill Ackman freaking out right here around the 5% yield on the 10-year. Here is the gilt crisis that happened. Forgive me. Gilt crisis right here. Here is the largest sell-off of hedge funds in 15 years right there. And then, of course, COVID. So what you're looking at, and this is what matters more than anything, is just the understanding that when leverage leaves the system, the markets move down. And you have 39% of all stocks, top 10 companies in the S&P 500. 39% of the weight of the S&P 500 is in 10 stocks. And then you have the deleveraging happening all at the same time. That's what the FNGD tells you. FNGD. FNGD, not FNGD. We're not cursing in the morning. I know that people have brought that up. But the point is that you can see leverage leave the system if you just pay attention to these 2, 3, 4 simple lines as a trader. And then if we get above that 50-day moving average, that's when you take a really, really hard shot to the downside. I like to focus on the SH, right? SH right here. So when we get above these key moving averages, that's when I'm shorting the market. But we're not there yet. So despite all the bad news, despite the concerns around the job market, despite what's going on in France, despite what's going on in the Great Britain, we're not there. The money hasn't moved yet. People aren't pulling money out. So don't try to short into this system until you get these key breakouts. Very simple. All right. Rays just blew their shot at the playoffs by losing a home series against the Indians. I hope everybody also saw Saturday night's baseball game between the Orioles and the Dodgers. And I'm going to keep it simple. Orioles were down to their last out on a no-hitter with Yamamoto. Well, Mr. Jackson Holliday stepped up to the plate, hit a home run, and then the Orioles rallied back. I've never seen a baseball game like that, and I have video with my father on this. It's awesome. I had a great time. I had a wonderful sports weekend. Hopefully, it only gets better. All right, let's dig into what's going on at the macro level. We got 4 minutes before we have the runner. Rate cut optimism remains the same. 100% optimism on a 25 basis point cut. It's all going to come down to what the expectations are here. 10%, right? I'm saying that in the next 5, 6, 7 days, I think this number goes up. So if this number goes up, the markets continue to move higher. Eventually, what will happen, though, and this is important, especially heading into Third Friday, is that if they only cut by 25 basis points, all of this positioning has to unwind. So if you get up to 25%, 30%, 50%, all of that has to be pulled out of equity futures. That's bearish for 3, 4, 5 days. That's where you can see a 2% day. And you have to be ready for a day like that. I welcome a day like that. The reason I welcome a day like that is because you wake up on a Thursday, on maybe the 18th, and the market sells off, and you see a 2% move down. Everybody's positioning for that. So if the market sells off, how do you trade that? Well, the way that I always advise you is just to simply take a step back and recognize that there will be opportunity for reversion trades. This is using the volume weighted average price. These are the standard deviation bands. We have plenty of writing, plenty of insight on how to make these trades. You're looking for a sell-off into the third or fourth standard deviation, and then you buy the in-the-money call that expires that day, and you trade around that specific number. Now, I'm not saying this is going to happen today or tomorrow, but probably on the 18th or 19th, 10 days away, there's going to be ample opportunity to make this trade. And these are the types of things when reversions happen, when funds cover their positions. These are the types of things that can deliver 200, 300, 400% gains in a single hour if you time it properly. So what I'm asking you over the next 10 days, stick with me, stay in our group, make sure that you join us here every single day. Be here with Brandon, with Blake, with Don, with everyone in our room every day, walking you through and being prepared. Because what you're not trying to trade just for a day. You're trying to prepare for a big day. And I'm telling you, I'm telling you, we're going to send you so many emails about this. We are building up to huge gains on the 18th and 19th. If the Fed only goes 25 points, because the optimism is getting irrational around what's going to happen on the 17th. They're not cutting 50. If they cut 50, I'm good with that. I have a different way to trade that. But my expectation remains the same. 25 basis points in September, 25 in October, 25 in December. And if they only go 25 points, the market's going to sell off, because all the optimism, all the expectations will have shifted. But as I continue to point out, there is going to be an opportunity to go long during the day when we cover in that last 2 to 3 hours on the 18th and 19th. So set yourself up for that. If you don't know how to do all of the focusing on how to set up your deviation bands, we'll put that in the chat, and we're going to go from there. All right. So again, some expectations remain the same: 50 basis points, higher markets, lower yields. The 10-year bonds under 4.1 right now. They're engaging in financial engineering. This is where we sit right now with CTAs. I know you guys are expecting the runner. I'm going to put the runner in a moment. Give me a moment. I want to walk you through a couple more charts. Give me 5 more minutes, and we'll do individual equities. Scott, if you don't mind, throw the runner in so that people can take a look at it. But here's the CTA positioning. This is max to the max. These are commodity trading advisors. They are long equity futures in a way that you don't see that often. They've been very, very strong in their positioning. So what do we look at this? It's just a reminder that if we have to sell, they're all going to sell at the same time. This can be violent. It will be to the downside. And once again, I remind you, here are the moving averages that we're paying attention to. If we break to the upside, then yes, we will try to short this market. But not yet. Not yet. CTAs are heavy equities right now. Market movers, Robinhood, big move on Robinhood, +9, app 11, jumping into that S&P 500 inclusion. I typically would be taking advantage of this, but I want to wait a little while. Obviously, When companies see this level of excitement around S&P 500 inclusion, what's happening is that they know that ETFs have to buy the stock. ETFs who are trying to replicate the S&P 500 are going to step in, buy the stock, and whatever the weight is. Typically, what I would do here is sell spreads to the downside. But here's the problem. I look at some of the broader macroeconomic events right now, and I see that Robinhood is not like you see this move down, pushing against that 50-day moving average. I would sell a spread on this, but I'm not doing it yet. The problem here is the fact that the MFI is just absolutely dropping. So the stock is moving higher, but the volume is low. So until the volume picks back up and the MFI gets above 50, that is where I will sell a spread to the downside. And the reason for this, because ETFs have to buy the stock. They have to buy AppLovin, they have to buy Hood. But we have to be patient right now. I like this in the next post September 19th as an opportunity. EchoStar adding a huge move after the Spectrum sale to SpaceX. Short-term trading opportunities remain in tech and telecom. Follow the momentum until it breaks. And then broader rotation into growth stocks remain obviously the key thing that we should be focusing on. But here's the thing. There are big macroeconomic events transpiring internationally that we're not discussing. First off, Ashiba resigned, right? This was a pretty big surprise given the fact that we have a lot of broader macro issues at hand. People don't resign just to resign. People cling to power. Now, maybe this is Japanese, but I was just very shocked that this happened. Expectations are a weaker yen, but that leads to more money printing. That leads to higher equities. It sounds, it sounds like something that shouldn't happen, but it's how things work. In France is a mess. I didn't realize it. I read about it all weekend. There's a confidence vote coming up right now on the prime minister. This is major political risk for the banking sector in Europe. And remember, we operate in an environment now where one sneeze in a single country can lead to a global pandemic for finance. OPEC is being cautious with the supply increase and gold continuing to move to new highs. But these things are getting macro. Look at what is happening right now with the index for liquidity in government bonds in the UK. 3 years ago, we had a major financial crisis called the gilt crisis, and you're seeing these spreads really expand in the UK. And then we move into France, and look at this. I mean, this chart right here shows you how bad this country's debt situation is. It doesn't seem like it's that significant because we always go, oh, it's France. No. SocGen is a massive, massive player in the financial markets. It's their most important financial bank, in my view, and they're going to experience some stress. Something is coming. Something is coming. No doubt about it. That can create some sort of liquidity event. Debt continues to expand globally. We worry about our debt here in the United States, but I'm telling you right now, when it comes to GDP to debt to GDP, we're not as bad as certain countries around the world. We're not as bad as Japan, and the ECB is a mess. So the liquidity event is probably coming. I think it's probably going to happen either in December or January. But this is just a reminder. We are in the business. If we go back to the movie Margin Call, I am here to tell you when the music stops. And right now, the music is still playing. So don't try to short yet. Don't try to be smarter than everybody else. Don't be the first over the wall. Just wait. And again, the moving averages will tell you when it is time to make these moves. Here's the thing. We're about to do the runner in a second. I am stretching right now. I am stretching to find stocks that I want to be long on. I went through on Friday with viewers at 3 o'clock on the number of stocks that are in the F and Graham score, right? High quality, cheap value stocks, and everything is above their 20-day moving average. All the high interest stocks, the stocks that have very high short interest, they're all above their 20-day. We are stretched. Something is coming, but the music has not stopped playing yet. So either spend the next week focusing on your education as a trader, and that's what we do every day here, or start to position yourself and find ways to trade while this market moves sideways until something happens. That's where we are right now. Be very, very patient. France's debt to GDP is much less than the US's. Yes, I understand that, Rosario, but here's the problem. They don't have a money printer. That's the difference. The ECB is run through Brussels. The United States can print any day they want, and Scott Bessent has proved that. France, the EU has 28 countries, I believe. One monetary policy, 28 tax districts. The euro is dead. They're dead. They just don't know it. All right. How quickly do they have to buy stocks added to the S&P 500? They have to do it on a quarterly basis, Ed. So I will dig into that. See, Don likes violence in his trade. I like that. All right, let's do it. It is runner time. Today, we are sticking with the builders. Guys, I don't know how many times I have to talk about this. I'm going to do a victory lap on this one because I said during the event, we did a whole week around insider buying. We did a whole week about 13Ds, 13Fs, 13Gs for Form 4 documents. What were the hedge funds buying? What were they buying? They bought a lot of CoreWeave, but they bought a ton of housing stocks. And what you'll do is you'll spend your time going, wow, how didn't I see that? It was in the 13Ds. It was in the 13Fs. They were buying it because they had been betting on lower interest rates, and the market has been pricing in lower interest rates. And is there more opportunity here? Yes. BLDR 170. That's my target. But here's the thing. You don't have to try to speculate to the upside. Look, markets do not go straight up like an elevator. They take stairs. Lower, higher highs, higher lows. Lower highs, lower lows on the downside. You can see profit taking along the way. So what do? Well, you can speculate to the upside if you want to, or you can do what I always do, which is sell the spread. Go back down to the 135, 130 level. Assign the stock. Pick a price you want to have. What does that mean? Option profit calculator. Get over here, my friends. Right? BLDR. So you look at this and you're looking for some sort of volume, right? You're going to have to set a price. You're going to have to limit into this, right? 40 cents on a $12, 12 to 1240. That's a pretty wide spread, but you might get filled. And this is a multiple day trade. So what you do is you sell to the downside, but the first thing you do is you buy the first put that you want. So put a spread in right now and look for the 630 trade, right? 630, or forgive me, 130 put at 630. Then once you have that, then you can write the second contract. Because again, when you sell a credit spread, you don't want to sell the put first because that's going to require you to put margin in. You're going to have to put down $13,000. You don't want to do that. So buy the put first, January 26, and then write the next one. And then put that in maybe somewhere around 8:15, right? You want to be somewhere in the ask process. All right, here we go. So, what does that create? This creates a position for you of 58% return, 66% probability of profit. Now, that's typically lower than what I'm looking for, but I am happy to be assigned the housing stocks back here at this level. As you can see, improving momentum, and people keep looking around going, how are these stocks making these moves? There has been heavy institutional bets on these names. Heavy. So you get assigned here. You got 13 grand sitting around. Hopefully you do. If you don't, you let the contract go if this breaks under its 20-day moving average. But the goal here is just the same thing, right? You're trying to just take what the market is giving you. You're trying to just simply take advantage of upward momentum without having to speculate to the upside. Instead, you're focusing on where can I get this stock at a cheaper level. On top of that, I hate this company, but it just keeps finding strength. This may be the end of this. This is breaking out of a negative channel after not just months, a year. ENPH breaking above that 28 and 50. I haven't added the 200. There is strength here, and there is a possibility of a rebound here, and I am not going to be shocked if we see the next quarter's 13 Fs and ENPH is on everybody's radar. Tapped 30 has been breaking higher, has held above these key moving averages. I've been talking about this because it has broken under its 50 multiple times, and it has been resistance over and over and over again. And now it's breaking above. So what do? You buy in the money, you stay somewhere around the 37.50 or 38 level, and you sell up to the 45 level. And you look for this to turn right back around. Instead of going lower highs, lower lows, you're looking for higher highs, higher lows as we move. A possibility back to 50. I just see it, even though I am not a huge fan of solar stocks. I see this being a leader. Eastman Chemical is on the board as well, pushing above its key moving averages. Your line right here is around 71.29. That is a push above the 50-day moving average. That's what we're looking for. We get above that average. That's where I'm going to buy in the money, high delta calls. Look to buy something like the $65 call for February, and look for a move back to the $80 level. Very bullish on the chemical space. I think that a lot of people have really underestimated this. It has been beaten up. And again, companies like this are showcasing that they have been expecting the recession. This is the time to step in and be a little bit more active. On the negative side, NOG breaking down. A lot of energy names have been struggling recently. NOG is a darling in the value space and in the quality space. I don't want to short this. What I want you to do, though, is just simply pay very close attention to that orange line. You see that orange line? That is the 8-day moving average. And when that 8-day moving average pushes above that 20, that is the time to buy this name. Energy is going to be swinging around manically for the next couple of months, largely on the back of the OPEC information. So let's be patient on this. I see short side down to around the $23 level, but from there, I will get bullish if there's an opportunity to go long here. And as you can see, you can do a lot with a $3 to $4 move on a company like NOG. MasterCard is selling off. Very fascinating to see this move down to that 20-day moving average. This is where I do this trade, right? Relatively simple. I buy in the money at around the 585 level. I sell the put at around 577.50. I don't know the contract off the top of my head, but I'm basically looking for. You could see the slope. This is bearish. You could see the 8-minute move. You could see the 50-minute, 20-day move. I'm looking to ride this $10 down to tap that 50-day moving average. And that's it. And then I'm out of the trade. So buying in the money, put, selling out of the money, 577, 577.50. And then if it breaks higher and pushes back above that 20-day moving average, I'm out. I'm fine with that. So let's take a look at that real quick. MA. My goal is to keep you out of trouble. I agree. Can you explain something like GLO works? Okay, Brian, I can't answer that at this exact moment, but I will dig into that. I promise. All right, so here we go. Let's look at October. Let's just go to the 26th. MasterCard. So we were at 585. Man, look at how wide these spreads are. That's terrible. October 17th will be better. Man, I mean, this has to be from Friday pricing. If you can keep these spreads tight, then you'll be a lot better off. But you would buy the you would buy the 585, and you would write. Where are we? 575. Okay. It's not a cheap trade. Just going to say it, but 385 to make 615, 160%, 45%. And again, the thing about this, if you make this trade, you're going to keep your stop very tight. In the event that the stock moves higher and breaks that 20 to 50-day moving average, then here's your losses, 5%. But if MasterCard continues to break down, you can see if you push to that line, right here, these are the types of gains you can make, 35%. And as I always say, you're willing to lose $1 to make $2, right? So that's the way this is set up. I'm going to have to dig deeper into this a little bit today. We'll go from there. On top of that, I want to point this out. DXC. This is an oldie but a goodie. Pushing, right? This is a stock that has really been weak. You're looking for a reversion. We want to see this on the weekly push above $14.99. It has bounced around a lot. Good company, cheap company. But once again, these metrics, when I talk about the fact that like fundamentals don't matter, this thing is dirt cheap. EV to EBITDA at 3.3, EV to sales at 0.46, price to sales at 0.2, price to book 0.84. This stock is trading for less than the sum of its parts. So if value investors are going to rotate into stocks with ample upside, I like this. I like a possible move back up to 17. So this is something I'm going to buy, and I'm not going to trade it on the 8-day. I'm going to trade it on the 50-day. My stop is right here at 1435. And again, I'm going to trade it around this level until it breaks. It has pushed above this level multiple times. It popped, it sold off, and every time it broke even. I'm hoping that this turns around. On top of this, MGA, right? Magna, very strong momentum. And this has always been like the PALL trade that we've talked about, right? That has not gotten off the mat. I was out back here at that 111 level on Palladium, but this has held. Very strong momentum. Stay in the money. Buy at the 45, sell at the 48 level. You're looking for a little bit of a move before some additional profit, taking probably around 47.50. All right. It's 9:20. It's Monday. The Buffalo Bills are undefeated. And Don's coming up with some music in a moment. We're going to go from there. I hope that everybody has a great day. And just a reminder, I'm just going to point this out. This is from our trip to the Maryland State Fair yesterday. You go in and you buy candy. You pay $7.50 for a half a pound of candy. Not a very good deal. But there were 2 boxes of Bazooka Joe that no one was touching. And I took a picture of it, and I got offended because, to be honest with you, I felt like this was an opportunity for every parent in America to make their kids chew Bazooka Joe and choose this one important line. Life is really hard, everybody. Shouldn't your gum and everything else be harder? I'll see you at 3 o'clock. Have a great day.